Once again, Bronson Hill is, former director of, what's it called? What was your official title with Nighthawk? I just said it.
Director of Investor Relations. Yeah.
Perfect. Director of Investor Relations for Nighthawk. And I'm assuming that, most of those 1,000 investor calls you did with Nighthawk, is that accurate?
That's correct.
Okay. Yeah. So, I mean, Michael Blanc's got a great system set up. Not making this a Michael Blanc commercial, but he has a platform builder course that he shows everybody exactly how to do what he has done as far as systematize everything. Great course, but I know Bronson, you were part of that, but you've since gone out on your own. You've created Bronson Equity, and I don't know the entire history, but I know you guys recently closed on a deal that you partnered with Elkhorn Capital, which is run by one of my good friends, Bruce Frazier. So that said, Bronson, welcome.
Awesome. Thanks for having me. Really excited to be here with you and the whole crew here.
Yeah. So this is good to have you. So do you have a presentation for tonight?
I do. I can just share the screen and kind of jump into it. But before I do that, I'll just let everybody know here. I'm really excited each of you are here. I'd love to see in the chat kind of what it is you are. If you are a money raiser, if you're a passive investor, kind of what it is you're looking for out of this presentation. And I just love, for everybody I see on that, I'd love to just have you drop it in. I'm assuming most people are interested in raising money, but you also get people that have different goals as well. So I'll share this in a minute here. So we got a capital raiser. Charles is saying that. And then I'm going to find how to share my screen and pull this up.
Yeah, and if you guys will do that, it'll help him to tailor what he is talking about to who's in the audience. All right. So Lizanette, new, Joe, capital raiser. Joe does everything. So, all right.
There's a presentation mode. There we go. Okay, cool.
All right.
Hopefully this will work. Okay, there we go. So, okay, so we'll just kind of jump in here. Like Brian said, I am very happy to be here with you guys. I love talking with investors and I love talking about this because a lot of this, for some people, it can seem really mystical. Like, how do you raise, a bunch of money and how do you do these deals? Or maybe you've raised a little bit of money and you're thinking like, how do I scale? And so I've learned a lot, obviously, by working with Michael and also now that I'm on my own. And we're going to kind of get into that. I have actually some updates to this presentation that I haven't fully updated, but I'll share with you. So basically now it's actually a little over 17 million. So I've raised a little more. I've had over 1,200 phone calls with investors. I'm going to give you kind of some of the highlights from that. So when you start having a lot of calls with a lot of people, you start to understand kind of who this person is. There's a lot of thought and comment going out. It just, and I think a lot of people wonder like, who is going to invest in my deals and where is this money going to come from? And so we're going to get into that kind of how you can really help people and really what the mindset of a passive investor is, because it's different than your mindset or my mindset. Often we'll have a different mindset. And so it is really important to think, not just from the way that we're looking at it about how am I going to, wrangle in, I got to raise $3 million. How am I going to do that? Rather than thinking, okay, well, what can I really offer here? What is it really that I have that I'm going to give that's really going to add value? So basically, again, this is something, and it's our last deal. It's actually a recent deal. So less than a year ago, we raised about $8 million in 24 hours. This is kind of after the group I was working with. They were raising about 600,000 per deal. And then we basically, about a year and a half later, were able to raise about $8 million in 24 hours. So we probably could have raised about 15 million for that particular deal. So this approach works. I'm going to give you some of the talk track of how it'll work, how you talk to investors, some of the things that have worked for me. So again, this is not the only way. This is just a way that's really worked for myself and the groups that I've worked with. So if you're a deal sponsor, this is going to help you. So maybe you're more on the operations side. I know, Ronnie and Jenny, they do more operations side. So if you're actually a deal sponsor or an operating partner, this is going to help you understand who you're serving and what's important to them. It's going to help you to align interests. And hopefully the goal for all of this is having investors for mini deals, which really is what allows you to actually scale. And it gets easier to, there's some groups that have been doing this for years. They've treated investors well and their performance has been great. estate and they have all the money. They have more money they know what to do with. And so that's obviously, you do it longer and you treat people well. That's kind of the end result we're looking for here. If you are a passive investor, and again, I think we should all aspire to it, whether we are on our way there where we're building, kind of ramping up our own capital and doing deals. I also passively invest in other people's deals. So if you have a deal, I'd love to get on your list and find out what you're doing, because it helps educate me. And then I've got money to invest as well. So it's stuff that, and it also, so anyway, this is stuff as a passive investor, or if you're only a passive investor, you should kind of be asking questions. Some of the things I've learned, I'll share with you about what are great questions to ask when working with operators and sponsors. So that's important to look at. So who am I? Again, some of this is updated. So I basically have raised about $100 million now for 1,400 multifamily units. I'm sorry, I've not raised. We have 100 million in assets, and I've raised $17 million. I was going to say I just went up like 5x in the last
but you just 10x'd it, 10x'd it, right?
Exactly. So I was an investment advisor for several years. I used to call myself a recovering investment advisor. I do a lot of content on YouTube where we talk about just different things that investment advisors don't talk about. And I think that we really offer, as people that raise capital, a really unique opportunity to educate people about the economy. So, and about investing. So I wrote this report that's called The Single Best Investing Strategy During and After a Pandemic. And that's kind of a lead magnet that I use to get, I write something compelling so that people will, give me their email and I can let them know about future information or educate them. So passive investors are a different animal. And again, if we are, zebras and we're trying to, wrangle a giraffe in, there's different things. There's obviously different food those animals are going to eat. There's different places that, they're going to want to go. There's different activities that they're going to do. And so we need to really kind of be willing to let go of some of the things that we're used to. And again, if you're like myself and you don't come from a family of privilege or of, what it means or whatnot, it's just, again, getting to understand that people think differently than you do. And so there's a few things that are really important and different types of animals or different types of passive investors that it's important to look at. So again, we have one of the types is a busy professional. So commonly of the people I've spoken with that do invest in deals, you'll get doctors, lawyers, CPAs, salespeople. You get people that are very, very busy. So they have a time problem. They're very busy. They're going many different directions. And one of the issues for them is time. They don't have enough time. They'd love to maybe do their own deals, but they just don't have time. But they have they have money to invest. So that's one group. Another group is a business owner. So it could be a real estate business, could be a service business, some sort of other financial service or other business. And those are people that, again, they typically sometimes will have financial freedom already, but they are looking for places to for tax benefits as well as to deploy capital that they're making in their business. So that's somebody that you can help. And then the other one is people that are retired, or maybe they're semi-retired. They're looking to retire and they want to travel. They want to spend time with family, and they are looking for cash flow. So somebody who's retired, they like a grade. Sometimes cash flow is really important because they're looking to get so much per month to be able to live off their investments, or they just have a lot of money and they're trying to figure out where to put it to make it work. So things that are really important. The first thing I'd say when you're working with anybody, the first question people ask is, can I trust you? Are you somebody that's trusting? And that's why friends and family a lot of times are the first people that invest in deals. Actually, for me, it wasn't. It was actually a guy that I met at a meetup that I put together, and he said, "Oh, I'd invest with you," again because he saw me as a leader at the meetup. So I'll get into kind of why that is, why people trust you and why they don't trust you. But again, they have to trust both that your integrity and who you are, and then they've also got to trust that you're competent to be able to help them. So that's kind of the second part of that. So like I said, can I trust you? That's a huge thing. And basically they're looking for someone for a relationship to help navigate investing. And they're asking the question, is someone trustworthy, credible, and do they have experience investing in any asset class? So that's something that people are really looking for to say, can I have a guide that helps me on this process? So how do you develop trust? Like that's a question a lot of people ask, and it comes down to I wrote it really big here, but really add value. Adding value to people is huge, because if somebody has a problem, if you can find a way to solve that problem, you're going to become a person of value for them. And I remember people that actually, I'll go back to Michael Blanc. When I first met Michael Blanc, I feel like I knew him because I'd spent all this time on his podcast and watch videos and things like that. And I realized he didn't know me at all. So I walked up and I was all warm and he didn't know who I was. He never met me. But to me, I had already a trust for him because he had added so much value, to my life. So that's kind of really how you develop trust, is you constantly try to find a way to add value to people. And actually, I will say this little side note here. How I even partnered with Michael is I was at an event, and it was an expensive event on a cruise. And somebody said this phrase well, it's like what Jim Rohn said, make yourself valuable to valuable people. And so everybody has problems they're trying to solve. Everybody, especially people that are business people or they're wealthy people or they're investors, whatever they are. And so if you can just try to find a way to help solve a problem, that creates value, and the people get paid for adding value. So the more value you can add, the more you get paid. So make yourself valuable to valuable people. I think that's one of the biggest things that's really impacted my life. And so when you think about your passive investors, the people that you want to invest with you, just what are the things that are really needed the most? So to me, these are a few things that I do to help add value. I give away a bunch of stuff for free. We do have a free ebook, which is, I mentioned, the single best investing strategy during and after a pandemic. It's at my website. You can take a look at it if you want. I've got a podcast I'm just starting up called Mailbox Money, different forms of passive investing. And then I write articles and blogs and videos, things like that. And so people will tune into that, and then they'll start to see me as, oh, this person is not only engaged in what's happening, is there's somebody that really can help me. So like we talked about the 3 different types, you have to figure out who it is you really want to reach. Like if you're trying to reach busy professionals, then you're going to have to try to tailor the message that you're giving to people that are busy. You have to find different mediums. That maybe a podcast is the best form for that, or videos, or what. You got to figure out what the best way to reach people are. So for me, here's an example. I don't try to reach young tech entrepreneurs, right? I try to reach my demographics, kind of, guys that are age 50 to 70. And most of those people are on Facebook or LinkedIn. So I do all of my stuff on LinkedIn. I'm not on TikTok. I'm on Instagram, but it's pretty bad. But I just try to figure out, where is the demographic that I'm trying to reach? And I try to provide resources for them. I also do events. So you be an expert. I have a meetup that I do. I've been doing it virtually for a while because I live in California, and now they're going back to masks. And we were supposed to have a meetup in a couple of weeks. So hopefully that will actually in person, hopefully that will actually happen. But doing meetups, doing panels. I think I put something in the chat a little bit earlier for an event coming up where we're talking about precious metals. And so you say, well, how does precious metals apply to multifamily investing? Well, it doesn't directly, but the goal is not necessarily, and as an investor, it's not multifamily or investing in self-storage or mobile home parks or any sort of asset. It's really wealth preservation and growing wealth. And that's something that I'm passionate about. So I find a way to basically add value in different ways, or be on podcasts or do different things like that. And I know Brian does that as well. He's got a great podcast that he does. I've been on his podcast. So he's finding a way, and his is actually really unique because it works with a newer investor and then somebody who's more experienced, and you kind of get them together, or they're asking questions. It's a very dynamic podcast. So if you haven't checked that out, you should check that out. Yeah. The Diary of an Apartment Investor. Is that right?
Yeah, that's right. And since you bring it up, I just want to double down on what you said. It's so much nicer when your first investor call starts like this. You ask them a little bit about themselves, and then when you start talking about yourself, like, hey, I want to introduce myself to you now, and they say, I feel like I already know you. I mean, that you're already starting off, a lot further off than anybody else. So, what he's talking about right now is pure gold, and it's amazing to see it in action.
Yeah. So what it does, it really builds credibility, right? So I had an event this was actually last month, and this was my best event. I'll just tell you how this worked. And I've had this presentation for a while, but I'll just share how this works. So I basically invited a bunch of well-known people to be on a webinar like this, but it's like a moderated panel. So I've started doing these panels, and I'll invite well-known people. And I had Russell Gray from the Real Estate Guys. I had a guy named George Gammon, who has over 500,000 YouTube or 300,000 YouTube subscribers, talks about inflation and macroeconomics. He's amazing. And then also a guy named Jason Hartman. So these guys individually, they each have videos that have been viewed over 500,000 times. And so I invited them to come on. Well, why would they come on your panel? Why would they come and do this with you? Well, it's because I can present them as an expert. I say I've got my list of 2,500 passive investors, accredited investors, and I can basically spotlight them as an expert. And so what happened in the process of doing that, I did some advertisement. I did some paid advertising online on Facebook. And then one of the guys, George, he has an email list of 20,000 people. And he sent a special email out to his entire list that was like, hey, come on this thing, my good buddy Bronson, we're going to talk about inflation. I was floored that he did it. But again, our signups went from 150 people signed up to we had almost 850 people signed up for that event.
Wow.
So again, and then what that does for everyone, hopefully, again, it builds that collaboration. It builds, hey, these guys, that's they get out of it basically being, they don't have to do any planning really much. And then they get to show up and I get to ask them questions as an expert. For me, because I'm moderating that, now I'm associated with all of this and I'm directing this conversation. So again, these are kind of creative strategies, but it allows you to be connected. So the one I'm doing next month that I posted in the chat earlier, that one's on precious metals. That's got the guy who runs the New Orleans Investment Conference. His name is Brian London, a guy named Dana Samuelson, who is the president of a numismatic gold and silver association, and then Russell Gray from the real estate guy. So again, it's who you associate with as well. That builds credibility. That's one thing that builds credibility. So I'm going to just touch base here. We'll have time for questions as well. So at the end, I'm happy to answer any questions. So if you have any questions, just make a note of that. So what I try to do is just really try to get people on the phone, try to get them to join my club. And so I do different things, like obviously my website, I have a little way they can go on and something, hey, join the club, join the club, join the club, and try to get them to set up a call. And that's basically, again, the whole goal of everything. So all this stuff I do is to try to get people to join the club. And then when I have a live deal, then they can basically be notified they have a deal and hopefully they will invest, right? That's the goal. So, again, people sign up, they go to, it automatically connects into this Calendly link, and then it will email the link. It also, this is another thing down here is in my Let's Chat area. Down below my email signature, it says I just have a 15-minute thing in here. Some of you could put 30 minutes, but again, it's just basically saying, hey, if you want to reach out, let's set up a call. Because the more you can get on the phone with people, the more you can have a connection with them, and the more people will invest with you. And I'm going to get into some of the metrics of that and why that is through my experience working with Michael and also my experience on my own. And it's really compelling. So we talked about time. A lot of people are short on time and they have so many things to do. So how do we help people, with their time, and how do we manage our own time? Most of all, for people that are really busy, we're all super busy these days. And so when we break down people's time into an hourly amount, maybe it's $100, $200, $500 an hour or more. I mean, again, I have some physicians that I know that make, over a couple $1 million a year each, and yet they work 60 to 80 hours a week. They make a lot of money and they have very little time available. And so time is just super, super important. So if you can make things really simple for them, if you can clarify things, it's all really, really important. So that's why passive investing obviously is very attractive, is that you do your diligence on the front end and it becomes hands off after that. So a lot of people know they should do real estate, especially busy professionals or people that have a lot of money. It's just very few do. They have a money person that takes a fee, and Wall Street, in my opinion, having been a investment advisor, I just don't think it treats people really well. I think there's a lot of hidden fees. I think there's a lot of ways that really don't add value to people. And yet so many of the people that we really could be investing, I would say 98% of the people that could be investing with us in syndications are not investing in syndications. So some people say, oh, there's so much competition out there as a syndicator. There's so many people doing this. And, how could we possibly also raise all this money? And I'd say, no, I'd say it's like, there's so much opportunity. There's this old saying that, a couple hundred years ago or a few hundred years ago, or maybe, I don't know, whatever the timeline was, there's a shoe salesman that goes to Africa and comes back and he's all discouraged. He says, oh, this is terrible. I went over there and, no one wears shoes. Like, this is awful. There's no opportunity. And then another salesman came back and he's just so excited. He said, this is incredible. What an opportunity. He says, no one wears shoes. So it's kind of the idea of really seeing yourself that what you have is really something that people need. They actually have a money problem, meaning they have too much money and they don't know where to put it, where they're going to get a safe, consistent return with an inflation hedge. So again, some people are
Bronson, I'm going to double down on that one too. I mean, time for real estate. I talked to a lot of people this last week, and a lot of very smart people, and a lot of smart money is putting money into real assets. So your gold conversation next week is what a lot of people are actually doing. Hedge fund managers and investment advisors everywhere are trying to put money into real assets. So yeah, there's a lot of people in it, but you're offering something that's going to help people, and there's still ways to get involved.
Absolutely. Yeah. So again, it's just trying to think through people's situation, what they're going through. They could be a tired landlord. And let me get back to this. Okay, perfect. So how to help a busy person, how to make it easy for them, offer shortcuts in different mediums, podcast, calls, video, written, and just educate. So again, more you can educate. Really, in my opinion, I have my background is in medical sales, but sales and education are actually very similar. And again, a lot of people think of sales, to raise money is actually a sales role, but a lot of people think of sales, they think of a used car salesman, right? They'll think of a low class, somebody who's trying to put their own needs ahead of somebody else. You look great in this nice 1975 Buick. And it's like nobody wants to be sold, right? But the idea of educating and helping people, even if what I have or what you have doesn't help them, if you refer them or you find a way to help them to get them where they want to go, it really adds a lot of trust and a lot of value. So again, the process of process of investing, basically you teach them about investing in your deals or investing in deals in general, the risks and the benefit. And just, you're teaching them about what does it look like to actually passively invest? Because most people that we've had calls with, they don't end up investing or they've never invested. So a lot of people are really brand new, and yet one example that comes to mind is one guy who spoke with a doctor who has $5 million in net worth. All he does is have a money person and does stocks and bonds. He doesn't own any real estate at all. So again, some of the stuff that we're talking about, and we understand the 506B and 506C and all the different credit, non-accredited, they don't even know what this stuff means. So again, teaching people that process is really, really valuable, whether they invest in your deals or not. Again, the first goal is not to raise the money, is to establish trust and really be someone who's a helper and not somebody who's a taker. I think that's just the first thing. And I think just as a person, as a human being, if you just say, you know what, if I'm here to serve people first, then the other stuff will work itself out, right? If I put my own agenda first, then it doesn't always work out well. And again, it's not that any of us are not susceptible to greed or to get into that, but I just think reminding ourselves that we're here to actually serve. And then when you are genuine in that, it really does come across. So you're going to teach them, how to vet sponsors. You're going to teach them, what about the experience of the operator? What type of deals do? They do value add, new construction, et cetera, and ask them about mistakes. So these are things that, again, I will teach people that are interested in passive investing about these topics. Again, this is not directly about my stuff. This is just saying, hey, these are questions you should ask. These are things you should ask of any operator. So what am I doing? I'm basically in the role of a guide, right? I'm not trying to sell them necessarily. I'm just saying, hey, these are things that you should consider when you're working with your investments. And that's why things such as gold, events on precious metals and gold, it's just basically trying to find ways to help people and add value in things that you believe in. So the numbers are obviously very, very important. Teaching people about numbers, rent growth, assumptions, cap rates, all that stuff is really important. And so it's really important that you're somebody that helps them to understand it without just giving them a spreadsheet, but really kind of walks them through that. So I'm going to get really nerdy here for a minute. So just put on your nerdy hat for a minute. And I'm just going to talk through some of the metrics and some of the things that actually happen here. So over 1,000 investors, this is kind of what we tracked from this. Now it's been over 1,200, but it's about a 30-minute call each. Some are a little longer, some are shorter. And we kind of use a standard talk track with investor questions. I'm going to get into kind of what that talk track was, or I can share that in a minute, because after a while, once you've had a number of these calls, there's a certain flow of that conversation. A lot of people wonder, what does that conversation actually sound like? So I'm happy to share that, because I think there's a lot of value in that of just, I get somebody on the phone, what do I do? And how you handle that is important. So the average net worth of the person, we actually kept track of this. We would ask people their net worth was 2 million, and some people were over 10 to 20 million. So again, some people had a net worth of 200,000, some people had a net worth of 10 to 20 million, but the average was about $2 million. So these are high net worth people. The conversion rate. So again, out of 1,000 people, we had a 17% conversion rate. So that's 170 out of the 1,000 people actually invested in a deal. So what does that say? That means that there's you have to talk to at least 5 to 6 people before any of them will actually invest in your deal. Now, in the beginning, when I first started, I had a bunch of friends and family that I knew were going to invest with me, that I was going to have, all these investors invest with me. I had 62 different conversations. I either met with them in person or with a phone. I had a survey, and I went through all the questions and everything. And a total of 0 actually invested. I had none of them invest. And the first guy that ever invested with me, like I mentioned, was at that meetup that I met for the first time. He said, "Oh, I'd invest with you." And so I got together and had coffee with him and just, qualified him. And it's on, I gave him a sample deal, which is important to have a sample deal. Like, here's what a deal would look like if we did a deal. And he said he'd put 100K in. So that's, and again, So that's a little side note there, but 17% conversion rate on this, this 1,000 investors. So I averaged about 13 calls per week, and the average value per call was $12,000. And that's really interesting if you think about that, because not everybody invested, but the average call, even of those that did not invest, was $12,000 of investment. So that's why I say it's really important to get people on the phone. It is really important to get people on the phone, because that's how you really build a personal connection. And usually people don't invest until they have a personal connection with you. You meet them at a conference, you have a call with them, you have different ways to connect with them. And so it's just something to quantify, say, wow, that's a really valuable call. So is it important that maybe you take a few hours a week and do calls with investors, or have your Calendly open and you kind of fit those in? Absolutely. So that's one of the most valuable things you can do, is scheduling or trying to find a way to get those calls with investors.
Now, question on that metric
Sure.
right there. You're talking 12K in money invested into deals, not 12K coming back into your pocket, right?
Exactly. Yeah. Yeah. So that's
Okay. Yep.
12K invested, on average per call, whether they invested or not.
All right. Good enough.
Yeah. Um, and then the average investment size was around $72,000. That was because our minimum was 50K. The last deal, it was 114K. The reason that changed, we increased the minimum up from 50 to 75K. So a little tip for there is, whatever your minimum is for a deal, about 80% of your investors will put in the minimum. So if you have a 50K minimum, about 80% will put in 50K. If it's 100K minimum, about 80% will put in 100K. So just keep that in mind. Sometimes we're doing a deal right now, and we're basically saying 75K minimum, but we'll make exception at 50K. So that way it allows people to get in and feel like they're kind of getting a special deal. But it also, if somebody sees 75K, it'll be, oh, well, it's 75K, and they'll put 75 or 100K. And also, I want to just put a little side note here. One thing that really upped this as well is having a conversation in the presentation at the end about asset allocation. And what I mean by that is, people wonder, how much should I put in a deal? Well, if you have a $4 or $5 million net worth, 50K is, if you want to be 50% or 40% or 20% allocated to multifamily deals, if you do the math, you'd have to be in sometimes 20, 30, 40 deals. So it might make more sense to put in, more like 200 to 400 or more, so some of those conversations even get people thinking, because they don't know what they should put in, and you can't necessarily tell them what they should do, because that's more of a financial advice thing. But when, the way I present that is, when you're looking at this, it's something to consider. Okay, so like I said, it's simply math. The more people you talk to, the more investors you'll find. People must get to know, like, and trust you. And remember that you are providing a service. So when you look at this and you speak with investors and you're raising money, there's this idea of being, somebody who's a hunter, who's out just going to go get the money. I'm going to go and chase the money down. I'm going to go hunt them. And just like a salesman, like hunter, that's one way to do it. But really, the way I look at it is really being a farmer. So again, this is why I do events like this. This is why Brian does stuff like he does. We're basically out here farming. We're out here trying to help. And over time, these things, they grow, and then it creates this huge trust where people then say, I want to invest with you. The other way is not a high trust way. It's more of a transactional relationship. And I just think it's not a great way to do a business like this, because it's not very relational. I think some of the best salespeople, they're not salesy. They just solve problems. But again, remember that you're actually providing a great service. A lot of people that you're going to talk with, if they invest with you, they're going to be really helped, right? They're going to be getting a lot of value out of the conversation that they have with you, and actually from the investment as well. So they're looking for great deals and great operators. So the question is, yes, what do I say to investors? For a lot of people, they wonder, once I get an investor on the phone, or I'm at a meetup and I'm talking with them, what do you actually say to find out, what the right thing is, as far as that conversation? So the first thing you can do is, you want to find out who you're talking to. So when you talk to someone, typically I start out and I'll say, hey, the purpose of this call is to get to know you a bit and build a relationship, see if it makes sense to work together. And you start talking through things like, how did you hear about us? Just so that you can kind of, and again, I always write this stuff down. How I use a Google document spreadsheet. I actually have if you want, I can share those questions with you that I use. I use about 10 or 11 questions that I use, just talking through some of their financial goals and net worth. And it's not the way to do it. It's just the way that's kind of worked for us. But it really helps you to understand, when you say, hey, what's your occupation and what's your previous real estate experience? if somebody says, well, I'm a doctor, my, net worth is, they get down to the net worth later, but net worth is 5 million, or I've never done any real estate deals. Well, if they never done any real estate deals, they don't have any rentals, then they are going to, it's going to be a different type of conversation. It's going to be more just kind of talking about how syndication works, versus if somebody's like, I'm in 10 deals right now and I'm looking for a 15% IRR with this, and I'm looking for these particular metrics with a refinance. Like that's a different type of investor. So you want to figure out who you're talking with, and you're going to tailor your conversation to that type of person. So again, just asking about what are their goals, what's their experience, that's going to open up a lot. I get into, so again, if you want those questions, I'm happy to send those to you. I'll just send them over to you. It's not an opt-in or anything. I'll just send them over to you. But basically, there's a few questions that I like to ask, and I'll put my email again at the end. So if you guys want to reach out, you can. But what I do is I share about my core values. So this is kind of where I've asked them some questions. I've written those things down, and then I turn it and I say, okay, well, let me tell you about who we are. And I say, this is the type of deals that we do. We typically look for the value add, type of multifamily B and C class. We like doing, returns of, 14 to 16% total return, conservatively underwritten, cash on cash of 7 to 10%, a holding period of 3 to 5 years. So I'll share, and I say, does that meet your investment criteria? So that's kind of the last part of the questionnaire. Then I say, well, this is a little bit about us. So we are really we're really passionate about being very conservative on our underwriting. And I give examples of that. And I share, this is why we do this. And, we don't have the highest numbers, but we'd rather under promise and over deliver, just because we feel like that's a high trust way of doing it. And so, and we give reasons and, about rent growth and just things, how people cannot be as conservative in their underwriting. So even if they don't invest, again, they're getting some value out of understanding how because everybody says conservative, but I talk about examples of that. So that's educational as well. Then I say, we really value transparent communication. When something doesn't go well in a deal, because some deals, go great, some go, not as well. And some, have, most deals have both. They have elements of both in the same deal. So when you have something that doesn't go as well in a deal, Kenny McElroy says, delivering bad news builds trust. So when you can quickly deliver bad news, I think it says quickly delivering bad news, not like just delivering bad news, but quickly delivering bad news builds trust. If you wait a year and all of a sudden somebody finds out something terrible is going on in the deal and you didn't even know about it as an investor, what a terrible feeling, isn't it? Some of that's happened to you. It's happened to me before. So very transparent communication is important.
I've had a lot of bosses say that bad news does not get better with age, and it's one of those things. The longer you wait, that the worse the potential news is, and I believe it. I believe it.
Yeah, so that's really important, being very transparent in the way you communicate, at least for us, and then really looking for a long-term partnership. So I tell people, we're not looking for just you to invest 50 or 100K with us. We're looking for a long-term relationship with investors. Hopefully that you'll have a great experience. You refer all your friends and family, and we look at it like it's a long-term partnership. And I think when you say that, again, you're hopefully trying to take some of the fear out of it, that somebody's just going to be a fly-by-night person, just take your 50K and run, or you'll never hear from them again. It's like, no, I really care what people's experience is in going through this deal. So those are just some of our values, but you're welcome to use those as well. But there's other ones if you have other ones that work for you, but share your values and who you are. And then, the goal is really to get these investors teed up for when you have a deal, because as you know, a deal happens. I mean, it'd be great. Wouldn't it be great just to know that you could have a deal webinar and you just have people throwing money at you? And like that deal that we did, it was a deal in Atlanta last August, so a little less than a year ago. And we had way more money than we had space. And it was amazing. And so again, the goal is really to get them kind of ready for that, so that for you, money is not an issue. So, so answer any questions that they have. When I'm done, I send them an example of a deal we've done, or maybe for you, if you're not experienced in that way, just say, this is the type of deal we'd like to do. And we have this thing, called scarcity. I mean, we talk about abundance and scarcity, and I think you use them in different ways. So abundance mindset is, we've got all the money that we need, right? Like if you have the vibe and you come across like, hey, if you want to invest, that's great. We fill up pretty fast, but it's no big deal. We have other deals that come up. So what am I doing when I say that? I'm basically coming across that I'm confident we don't need their money. We don't need people. Even if you really need their money, don't tell, hey, wait, we really need your money. People don't give to need, they give to vision. They give to, and really what their needs are, right? So I think really keeping that in mind, that you yourself just remind yourself just to, hey, even if it's deadline and you just say, you know, we got the money we need, and it comes through, you just kind of have faith that it comes through and it will. And then at the end, the flip side of that is what you're doing when you tell somebody, hey, you know, you typically fill up pretty quickly within a couple of days or a few days. And hey, you know, if you don't get into this deal, we always have another one. It's basically kind of putting it on them. That's like, oh, this person really doesn't need my money, but it'd be really lucky to get into that deal. It's almost like when you go to a restaurant and there's a line out the door, right? Like you just feel like, oh my gosh, that must be a really good place. And so again, it's a lot of it's perception, but there is such a vibe and a mindset. And again, I don't have necessarily all the psychology around this, but there's something really there that's true, that if you come across like you're needy or that you just really need this or whatever, so you have to have kind of a interested disinterest, that it will help them. But if they don't do it, it's totally fine. I just had an investor recently that told me he was going to invest 300K and then he lowered it to 100K. And I was like, hey, no problem. It's totally fine. You know, that stuff happens.
Hey, Bronson, you mentioned the psychology. There's actually a book called The Psychology of Influence, and scarcity is one of the 6 things that motivates people to action. So the psychology is there. And if you're interested in the psychology, you know, the great book to read, and it's absolutely true.
That's awesome. I'd love to, if you send that link or put that in the chat, I'd love to.
I will.
Is that the one by Cialdini?
It is.
Okay. Yeah. It's Influence. Yeah, that's good. That's one I'm on my list for a long time, never read it, but I think it's probably that same principle then. Mm-hmm. So this basically what you're doing is you're lining them up so that when you have a live deal, you're saying, this is exactly what this is going to look like. This is the process. This is how it works. And, you know, if you want to get in, great. If not, there'll be another deal. And so you're just letting them know all that information ahead of time. And if they have retirement funds they want to use, tell them to get their QRP, which is a retirement type of account, or their self-directed IRA that can invest in real estate. Tell them to get it set up now, because you get investors. Some of you can relate with this. You probably can too, Brian. Somebody's like, oh, I want to get in your deal, but I don't have anything set up. And it can take weeks sometimes to set that stuff up. So I always tell them, like, the best time to do that is like before you have a live deal. And it kind of sucks when you have somebody's got 100K and they just can't slide it over and get it in there. And so to try to do that ahead of time is helpful. Okay, scroll down here. So this is our investor club. This is what we do. I think I shared that. I don't know why I have another slide of that. I have this report. If you go to my website, you can see this. Again, the reason I put this in here is this is educational. And so I think it's important that you create something that hopefully people will get, and they will say, hey, that is something of value. And I get a lot of people that download this thing. I'll get, sometimes in a week, I'll have 10 or 20 people download this thing. So my list grew by 10 or 20 people, which is great, right? And it's somebody else who can basically, get introduced to our stuff. And then once they download that, I have a weekly email that goes out. And it basically is just, here's a video and a blog and some information about what we're doing. Here's an event, a live deal, stuff like that. And I basically try to find ways to add value there. So anyway, this is, I guess, formally the end of the presentation, but if I can be of help, feel free to shoot me an email. And again, this is something that, if you have ideas or ways we can improve this, I'd love to do that, because I think the more we can help each other, the more that we all win, right? So it's really, I think in this group, it's really important that we have an abundance mindset towards each other and just say, hey, if we help you and you do a deal, maybe we'll do another deal together. And I've just watched that again and again. So I hope as you look at this and with other folks in the industry, that you just realize there's so much opportunity out there. And the biggest challenge really is Wall Street, and just they have billions of dollars they're educating. And I personally believe that they will be so much better for many reasons by investing in your deals and my deals. So,
yeah. So I got one question from that very end. You talked about your lead magnet. People are going to go to your website. They're going to download the free content. Obviously, you're capturing their email address when they do it. How do you move from capturing the email address to that phone call that you say is so important?
Yeah. So basically, what I do from the lead magnet, I'm just going to stop the share here so I can get back to this. So what I do from the lead magnet is when they download the lead magnet, I have it to where they have to put in their email address, and the lead magnet is actually sent to them. So it's not just like they go on and they put in their email and all of a sudden here's the lead magnet. They actually get it emailed to them. So that confirms that they actually have, that we have their email correct. I do recommend Active Campaign. Do you use Active Campaign, Brian?
We use something else.
Okay. Yeah.
We
So
thought about it for a while, but it was too complicated for us. We're not
right.
techies.
No, I had to, Michael's like really good at that stuff. And I had to just
Yes.
like, finally I figured it out. I was like, oh my gosh, this is great. But so then the process. So again, you're basically talking about a funnel. So if you think of a funnel, it's really wide at the top. You're just trying to get people in. So to me, one of my funnels is events. So again, I had almost 850 people sign up for this event that I did about inflation. So that's a huge funnel. So either they come to an event, they download my report. There's some way that they've been introduced to me. But from there, basically, I'll send them the free thing, or they'll come to the event. Then they'll get an email that says, "Oh, welcome to Bronson Equity. We do educational events such as this and this and this, and we address these problems, whatever. We also do multifamily deals, and says, if you're interested in joining our club, check this out here." So they can join the club there, and they get you. I think it's like three days in a row they get an email. So the first one's just an intro. This is who we are. This is what we do. For us, it's two things. It's basically education and it's deals. And then the second day I'll say, I'm going to send you an email tomorrow, and it's going to be a resource. And then basically the second day I give them a resource that's like questions you should ask a new operator, or things that you should consider before investing. So that's like a PDF file that goes out on the second day. And then the third day, and I say, look out for the one for tomorrow. Third day is a case study of somebody who quit their job through passive investing. So again, I have a different flow that goes through here of basically, and if you can get on there and see how that looks. And then every single email they get, if they haven't joined the club, the investor club, there'll be a little note at the bottom that says, "Hey, notice you haven't joined the club. Love for you to, you hear about our upcoming deals." And so I continually try to do it. Now recently we've done some 506C deals, 506C, which you can basically advertise. You can share them with anybody. So I share that with my entire list. And if people unsubscribe, they unsubscribe, because again, you don't want to you don't want to send too many emails out to your list, and some people get tired of your emails. But so I have kind of my deal ready investors that are, a certain size of my list, that those ones are for 506B deals. And then I basically market everybody else for my 506C stuff.
Yeah. Nice. Now, I just had something so if you guys want to see exactly what Bronson does, go to his website and put your email address in and get that ebook, and you're going to get the exact emails that he does. You'll see it firsthand. So great way to do it that way. So question from Liz Annette. She said, do you suggest lining up your investors in advance prior to having a deal, or do you need to have a deal to present to potential investors? That's a very oft asked question.
Yeah. And it sometimes people think, oh, is it the chicken or is it the egg, or which one is it? I personally think, like I said, if you don't have a deal, like make up a deal. Just get here's a property, go on LoopNet, find it, and just tell people, hey, this isn't a live deal, but this is what a deal would look like, and put in the numbers, put in the projections, whatever, and just put a little PDF together that's just something simple, and so people get a sense of what you are doing, so that when you do have a live deal, it'll be like, okay, I kind of understand what you're looking for. The challenge is if you wait till you have a live deal, it's too soon to try to, and again, we're not, again, if you try to do it all at once, it puts you in hunter mode, because you're like, oh my gosh, I committed to raise $1 million. I have no idea. You want to buy a deal? You want to buy who you want to, it's against the used car salesman. Look again. And instead of hunting, if we're farming, it's just, we're constantly putting information out there. And what it does is it allows us to, again, things will grow organically over time. And then when I put out a deal, it allows people to say, oh, I can invest in this. So there's this book by Gary Vaynerchuk, and it's called Jab, 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 Right Hook. And it's basically saying that you're constantly giving information. You're adding value. You're doing all these things. Then all of a sudden it's bam, you get coming in with this offer. And so again, it's not just right away, hey, here's an offer. It's like, well, you haven't really given them anything valuable. So my dad used to say something, and he's not in sales, he's in education, but he used to say this saying, he's saying, you do the work first and then you get paid later. So it's kind of the same with this, right? You're basically serving people, you're serving them, you're serving them, you're building that trust. And then if you do a deal together, that's going to happen later.
Yeah. Like that $8 million raise came from years and years and years of building that investor base. It wasn't just, hey, I'm going to start raising money tomorrow. I have a bunch of independently wealthy, multimillionaire friends, and I'll make 3 calls and we got $8 million. All right. It was, a lot of work ahead of time. Okay. One question from Kenneth Hines. He says, do you offer different classes of shares based on initial investment or investor goals, amount, so if somebody's putting SDRA versus, a large sum of cash, et cetera?
Yeah, so there's people that for those that aren't familiar, different offerings of shares. So some people say, hey, instead of a 8% cash on cash with some upside, you can have a 10% return with no upside. And so some
Mhm.
people like that because it's more of a fixed thing. It's in a position that's before it's preferred before the other shares. I know one guy that does four different his deals. They do four different types of shares. So they'll have based on investment amount. So they'll say, okay, it's a 6% pref with whatever upside when you invest 50K. At 75K, it's like a 7 pref, and then you all the way up
Mhm.
to like 150K, then it becomes like a 9 pref or something. So there's different ways people structure
Mhm.
it. I personally think just the simpler you can do it, the better, the easier it
Yeah.
is to understand. And so I like straight splits. I've done preferred return deals. I just like it when it's 80-20 or 70-30, and it's just really simple because I think we've done stuff. We did one deal where it was an 8 pref, and then you had like a waterfall that changed every certain amount, which is very institutional. So they'll be like 90-10 for this amount, then it goes to 75-25, and it goes to
Oh
it
yeah.
just gets really confusing. I'm just glad I'm not the one who's actually calculating all that at the end when the deal
Yeah.
sells.
I mean, end of the day, a confused mind says no. So if you're putting out too much information and they're like, I don't understand that, they're probably not going to invest. So I like to keep it simple, stupid principle, KISS. But
Yeah.
all right. Don's question was about asking people their net worth. I think you answered that directly in the presentation. I'll take it one step further. I mean, does asking somebody their net worth, has that ever turned out badly? I mean, did people get uncomfortable talking about that, or are most people open about it?
Yeah, it was interesting. When I first started doing this, that was a question that I was actually encouraged to ask, and I felt a little
Mhm.
uncomfortable. But the way I kind of, again, it's all how we package it. So again, that's not the
Mhm.
first question. That's usually after I've asked, what their experience is, and then I
Mhm.
say, oh, are you accredited? Are you sophisticated? And then I say, and just for our records, what is your approximate net worth? And I just ask them, like,
Mhm.
because then it's just a question. It's one of the questions here. I'm just asking it, and sometimes people I've had a few people that feel uncomfortable answering it, but
Mhm.
again, it's as somebody who's operating, working with people. I'll just tell them this is confidential information. This obviously doesn't go anywhere. And sometimes people just say, I'm accredited. I qualify with net worth. So I'll just okay, I qualify with net worth, over 1 million. But I think it's helpful though too. And if you do a deal, there are questions in there that actually say, are you 1 to 5 million net worth? 5 to 10,
Mhm.
whatever. What is your net worth? And because it actually comes up, especially if people are not accredited. I think if you want to be, you're more likely to have some sort of liability or lawsuit from sophisticated non-accredited investors than
Mhm.
higher net worth investors. So if somebody's worth 300K and they want to put 100K in your deal, I would feel really concerned about that because that's
Yeah.
more than 25% of their net worth. So again, you have to think a little bit more like what's really best for this person. Because again, let's
Mhm.
say your deal doesn't go as well, and all of a sudden they got 100K in your deal, and actually they needed that money, or maybe they borrowed the money, they took it out a HELOC, or so you have to think about those things of what's actually good for them.
Yeah. Good answer. All right. So I didn't see, I'm scrolling through the chat again. I didn't see any other burning questions. If you have a question, drop it in chat, or even better, take your microphone off mute and just go.
Hey Bronson, how you, man?
Hey man, good to see you, Ronnie.
Good to see you. Hey, question. Brian and I were actually we were talking about 506Bs versus Cs, and so
Mhm.
uh, tell us about did the raise look any different in regards to when you put out a 506C? Did you get any other people that you didn't expect to invest? Right, like a lot of times
Yes.
the Bs obviously have relationships, you know them. You put out a C. Did you get people like, oh, that was out of left field? Why this person invest? Did you see any difference at all?
Yeah, so I did. So again, a bit of my story. I was working with Michael Blanc at Nighthawk, and then I left in September. So then from September to December, I was kind of building my platform, kind of looking for the right deal. And then I had two deals hit about the same time, and they were both 506C. One was a 506C anyway. The other one, I kind of talked the sponsor into doing a 506C. But for me, one thing I did is I started actually, marketing to people on all different forms, going, LinkedIn, Facebook, even doing paid ads, doing Google and Facebook ads, and about half of my investors ended up coming from not from my own existing relationships. They came from other ways. There's actually been a really favorable change to 506Cs. It used to be, and it was a whole pain in the butt, that you had to basically pretty much every deal you do, you had to independently certify that they were
Yeah.
accredited. And so there's this thing called Verify Investor, and it's like $60, and they have to go through it. Some investors don't make it through it, and they're like, "It's a pain. Forget this. I'm going to find another deal." So it is another step. But the plus side that this just changed in March, that if you get a letter signed by their CPA, or if you get, and we actually have there's a template letter you can use, or you can find one, you make your own, whatever, or they go through Verify Investor. They only have to do it once every 5 years. So once they do it one time, if they do any other deals with you or anybody else for the next 5 years, they've already got that done. So it takes, so what I tell people now is, oh yeah, we got this little thing. Once you get it done, you don't have to do it again for 5 more years. It becomes, it's a little bit of work in the beginning, but it's not every deal. And so that becomes really nice. So then if I have repeat investors, I'm, oh, we got that. Like there's no other issue with verifying anything. But 506C is different. In some ways, we talked about scarcity. When somebody sees a deal everywhere, everybody's got it everywhere. That's tough, and it's tough. It's tougher even still. And you'll see this sometimes where you'll see somebody emailing you about a deal, and then you get the same email from 3 other operators that are doing the same deal, or you'll see paid ads about the same deal from different operators. Like that gets really tricky because you're putting money out there, and it's basically that, different people are marketing the same deal. So there's pluses and minuses to it. I think I like 506. If you have enough internal investors, 506B is great. But 506C, I don't see it as being, there are advantages to it as well.
Nice. Good question. Very good question, Ronnie.
Hey, Bronson, Charlie Wessel, how you doing today? Brian, how you doing, buddy?
Good to see you.
Good, Charlie.
Man.
How's it going, man?
Good. So I heard that I saw where your minimum investment on the last one was $75,000. You guys got to excuse me if y'all can hear that. There's Disney Plus playing in the room right next to me, dude. And
I got Minecraft in the room next door. You're okay.
Yeah, I got twin 8-year-old girls and a 12-year-old boy in there. But yeah, so how have your investors responded to raising that limit from $50,000 to $100,000? Because right now, I mean, really our average is about $75,000 to $100,000, investments.
Yeah. It was a change. We were really worried about it when we did it. And then it really wasn't that big of a deal. And I think these days, a lot of people have, some people, I mean, not a lot of people that would invest with us are getting stimulus checks, even though I've been getting them, because as a real estate professional, you can reduce your income to 0 sometimes. So that was actually a real positive, which I was surprised. But I would say, again, if it's kind of like, if we don't ask for it, then it doesn't happen. And whatever you say, would you say that most of your investors are accredited, or do you have a lot of non-accredited sophisticated investors?
All we do is 506Cs.
Oh, you do?
So they have to be accredited.
So in that case, I would say if I personally would say if you're doing a 506C and your minimum is 50, it's probably too low. And I think you'd be surprised if you raise to 75 and then eventually, now if you go straight to 100, I know guys that do only 100, and they've, more recently they've done it, and they've said, I like to do 75 because then it gives some flexibility, because you'll get a couple of people that like, oh, you guys were always, this, and you tell people, hey, we're raising it. And then you'll get somebody say, oh man, I would have invested at 50. And you say, well, if I could make a special allowance for you at 50, would you do it? And you have the ability to do that. You can basically take less money, and in the PPM, a lot of times you can say, oh, minimum 75, but it's at the discretion of the operator to take less.
Right. Yeah. There's always that line in there that you can take less. Because I know on a couple, like I had, a couple 506Bs, I had a couple of buddies of mine that were like, man, I really want to get in, but I don't have like 50 grand to do it. And I was like, all right, well, throw in 30 grand and we'll let you in on it,
Yeah.
But yeah, I think Vinny Chopra, I heard this a while ago that he was just bumped his straight up to 100 grand. And he was like, I have 0 problems, raising it from investors from 100 grand. It cuts down the whole workload when you got $100,000 minimums, Yeah.
Well, and it's a different type of investor. Again, you want the investor that's $2 to $5 million that like you go from 50 to 100K, and it's like they don't even break a sweat because they have a lot more money to invest. Now, the people that are going to sweat, if somebody's got, maybe they're barely accredited or they've got $1 million, it's going to be harder. And it's not that you don't want it's not that you don't value people. It's not any of that, but the person that you're really like, who are you actually going after? It's probably people that are 2 to 5 million in net worth or more that are like, you raise it. But then, some of those people as a first time a lot of them are not going to put 250K in your deal. Now, it did happen one time. We actually raised the minimum on that deal in Atlanta in August. We had a first time investor after I had that allocation conversation. They put 500K in as a first time investor with a net worth of 5 million.
Yeah.
So again, it's
nice.
like, and it was exceptional, but like, again, it's just how you set it up, how you present it. And again, a lot of it had to do with their understanding of who Michael was, but we didn't know him, but they obviously knew us because they were following all that stuff.
Yeah, we had an investor who invested in 2 deals, 50 grand a piece. And then the last deal, he dropped 650 grand.
Yeah.
I was like,
nice.
And the reason he did that is because he trusted you and he's trying to solve a problem. He's got too much money. He needs to know a place to put it.
Yeah. Probably needs some depreciation for taxes. You know, just looking at the numbers, 50 to 75,000 is a 50% increase, which means you only need to find 2/3 of the amount of investors, right? So just by doing that increase right there, you're going to lose a couple, but by raising the bar a little bit, your average number is going to go up a lot. I mean, Bronson showed his number, 72,000 was his average prior to raising the bar. So most people who invest, most people who invest aren't investing their last penny into your deal. There's always a little bit of flexibility, and in the investments that I have invested in passively outside of Four Oaks, I've actually put the minimum amount in every single one. And if the minimum were higher, I would have gone higher. So, I mean, it's one of those where I think the numbers are there, if you're looking at it. So we've contemplated doing the same thing. We haven't yet, but anyway. Any other question? Oh,
so we got
there's
2 more
question.
questions here. We
saw those pop in. Yep. All right. So question
First
from
hire.
Lizanette again. Have you encountered any confidentiality issues, and how do you deal with them? For examples, are investors allowed to maintain their anonymity from other members in a syndication?
Yeah, that's a good question. I think it's a great idea to have, anonymity in a deal. I've been in deals where they sent out paperwork and everybody's name was on there and everybody's like address and everything. And I just think it's a little unprofessional. I think one of the reasons, a lot of wealthy people do this as well is so that you'll protect their information. They can be anonymous. Another way too is if I actually don't use Zoom to do deal webinars because I think that, it kind of allows people to see everybody else that's on there. I use something called Webinar Jam. And if people want to stay anonymous, they can, or at least they're a little more, I don't know if everybody can see who's in there, but I don't know. It's just something to me, something I do think about. I think there's a couple reasons for it. One is obviously maintaining their anonymity, but I don't know. I just think it's a good thing to do. So.
Yeah, I agree 100%. I would not be sharing that information. So, all right. The other question from host, who was your first hire when you went off on your own?
Right. There was one other part of Lizanette's question there at the end. If somebody can come in as an entity, so that's the question is absolutely. That's the way. If anonymity is really important, is just to come in as an entity. And that's a way to kind of guard anonymity even more. I don't advise investors to do that. I say, hey, we're in an entity when we're doing this. We're doing a private placement. And you can come in as yourself. If you are high net worth or you're being advised to do differently by an attorney, then do that. But that's something they'll usually figure out on their own. The question about the first hire, I hired a virtual assistant full-time in the Philippines. There's a really good training by Neil Bawa. So if you search Neil Bawa virtual assistant, and basically he's got a process of how you do that. There's also a interview he did with Whitney Sewell on his podcast. I don't think it's like on the podcast, you have to find it on his website, but those are 2 ways that were between those 2 things. It just gave me this framework to how to find somebody. I found somebody who's great. So she's been with me for about 8 months. She helps me with all my content, all this stuff, and she's awesome. So that's my first one. I also have hired a writer to kind of help with taking my videos and turning them into blogs. I've had some help with Facebook ads and video stuff, of course, as well.
Yeah. Well, I guess host wanted to be anonymous himself, joining as an entity for this one. So good job, host. No, so good enough. All right. Russell says, you mentioned the importance of being able to add value. If you're starting out, what should you do to build the potential for adding value? Good question.
So the first thing you can do if you're starting out is to get a active campaign or MailChimp account and basically add every single friend and family that you have and just add them to that list. And what you're going to send to them is you're going to send them just, here's the things I like about multifamily. Here's the events that I'm going to.
Mhm.
Here's the things that I'm working on. Here's the things that I want to do. Here's the books I've read, whatever. And he's like, why are you doing this? Well, the reason why is, Russell, I'm not sure what your background is, but they don't know you typically as multifamily guru Russell, right? They'll probably know you as if you're a lawyer or you're, work in sales or whatever else you do. So you're trying to change this brand and this of who you are. And that was challenging for me because again, my background's medical sales. So they know me as a guy that wears scrubs and goes into surgery, right? So I had to kind of change that. And part of how you do that is you start telling your story. And I think the email list is huge because you control that information, as well as it's not necessarily in conflict versus if you start sharing stuff on LinkedIn or Facebook, your employer can see that and they can start questioning your commitment and things like that. So when you start out, I think the first thing is telling the story. It doesn't mean that your friends and family and all those people will invest right away, but it helps you to clarify your message. And then 2-3 years down the road, they see you doing it and you're closing. And that's what's happening for me is they're saying, oh, wow. And then I've had a number of those people actually start investing. So, but again, it really helps to start with that.
Yeah. I wish I would have put more effort into that when I started. I did a very mediocre attempt at sending that out. And then 6 months later, when we had a deal and I started, hunting for capital, and I was hunting for capital, not the let it roll in, but I got a lot of people look at me and say, wait, I thought you were active duty military. What do you mean apartment buildings, or did you retire yet? I don't understand. So yeah, definitely get the word out and it'll save problems later. And it's all about how they view you as far as identity. Okay. Nobody's going to invest with Brian, the Marine Corps officer. All right. Or $50,000 with Brian, the Marine Corps officer. They'll invest with Brian or Bronson, the apartment investor though. So,
yeah.
All right. Well, we're about out of time. So we're going to cut the questions right there. Bronson, thank you so much. You have added a ton of value. And then he did make an offer for everybody. If you want the questions that he asked, just send him an email, bronson@bronsonequity.com. I think I got that right. Zach, can you drop it in the chat?
I'll just drop it in
again?
the chat too. Yeah.
All right. And incidentally, for anybody here, if you hit the three dots at the bottom of the chat room on your screen, you can save the chat and get everybody's contact information. So if you want to be contacted or you want to contact anybody else in here, drop your information in the chat room and we'll go from there. Bronson, anything else to add before we kick off our virtual networking?
Yeah, I just wanted to say I really appreciate you having me. This is a great group. I think you guys have a really good thing going here, and there's some great people in the room, some great questions, great engagement on this. So I appreciate you, Brian, and your whole team. And I know you're 4 Oaks, and you added a 5th person, but it gives you even more. 4 Oaks
plus one.
Yeah, plus one.
Exactly.
Yeah, exactly.
Yeah.
But I know we're gonna do a little networking. I'll stick around for a few minutes. Then I've got a gym. I've got my daughter with me today, so I want to spend a little time with her before bed here. So, but this is really wonderful. So, but yeah, everybody feel free to reach out if I can be a help in any way. I just love what we do, and I think the more we can do it together, the more fun it is, and the more we can help each other.
All right.